This video is going to review the Google Options trade alert that we sent through our options picking service here at Stock Market Guides. So this particular trade alert was sent before the market opened on January the 8th, and it called for an entry into this particular option position on January the 8th at the opening bell. And you can see it calls for an exit 3 days later on January the 11th because this particular trade was designed to be held for 3 days. It indicates the exact strike price and that it's a call option, the exact expiration to use. And so let's see how this one performed. So an entry at the opening bell on January the 8th. And you can see here that this is a stock chart for Google. And right here, this is January the 8th. This is the price bar for January the 8th. So this was the opening bell right here. And the price of that option at that time was $7.45. That was the prevailing price. And so that might have been the price, at least approximately, that a trader could have gotten if they followed along with the trade. And you can see here, this particular trade was just worked out perfectly. It called for an exit again on January the 11th at the opening bell. And, you know, options can only be traded during normal market hours. And so you can set up these buy and sell orders before the market opens such that they get executed at the opening bell. And here you can see that it was sold right here. So, you know, there's all sorts of outcomes that happens when you trade. Not every trade is a winner. Sometimes you buy right here and it just doesn't go your way. It's just the way it goes. You can't win every trade. But it's nice to appreciate when trades go almost perfectly well. I mean, this one, you really could hardly ask for anything better. So the exit price, the prevailing price of the option at that point was $13.90. So over a 3-day period, it was an 86% return on that particular option. And that's for a, that's for a deep in the money call option, meaning that it's one of these kinds where if the price goes against you, it has some meat on it because it's a deep in the money option. So, if you were to buy out of the money options and the price goes against you, it could, the value could turn to zero pretty quickly. But these deep in the money options, they retain their value better than out of the money options. So to get an 86% return on a deep in the money option over a 3-day span is pretty solid. So this particular trade worked out really well. Now they don't all work out that way, but what we try to do is give you the information that might put the odds in your favor. We try to find these trading opportunities where there may be an edge to taking the trade. And we do that by gathering historical information about the trade setup for that given option. If you have any questions about our trade alerts or about our service or anything else, you can reach out to us anytime. Our email address is support@stockmarketguides.com.